For the next part of the online module, I'm going to present to you the development of a trial balance and the preparation of financial statements of CECs or telecenters.
This is now the second part of the module where we are going to present some sample expenditure and revenue budgets, trial balance, as well as financial statements, and how these financial statements and reports are prepared. For the expenditures and revenues budget, the content may vary depending on the time of preparation. If the CEC is about to be launched, we prepare the so-called startup budget for expenditures and revenues. And if the CEC is already established and has been in operation for quite some time, the budget that we're going to prepare is operating budget. But regardless of the type of budget that we prepare, the components are quite the same. Just like in this case, we have capital outlay, personal services, miscellaneous and other operating expenses, and revenues. Now, you will note that the categories that are used in this presentation are somewhat similar to the categories used by local governments under the National Government Accounting System. Since many of the CECs that we have in the Philippines are LGU based, like the CECs initiated by the CICT, by the TELOC, and even the FIS and escuelas. So the financial statements and reports that we are going to present here are quite reflective of the financial transactions and balances of our extant or existing CECs or data centers in the Philippines. For the capital outlay, we have under it building improvement, office furniture and fixtures, office equipment. It is, of course, important or necessary that the CEC must have its own building or maybe just a space for it to operate. Now, in this example, we have this account building improvement, and the cost is for the renovation of the building provided by the local government. Although some CECs have their own buildings, in which case we use building account instead of building improvement. For this example, the cost of 200,000 pesos represents the installation of partitions, comfort room, electrical lighting systems, security, as well as painting of the newly renovated building, and the total amount is 200,000 pesos. Of course, the CEC needs to have desks and chairs, cabinets, shelves, and window blinds or curtains. And in this example, we have a total of 142,000 pesos for the office furniture and fixtures expenditure. And for the office equipment, we have a total of 295,000 pesos. The office equipment stated in this report include the three desktop computer sets provided as counterpart by the CICT, 4-in-1 integrated printer, webcam, and hub. The rest are counterpart of the host local government. Although the national government agency, which is the CICT, also provides for some free training as part of the package covered under the Memorandum of Understanding between the host LGU and by that, national government agency. Um, we also need people, of course, to run the affairs or to manage the CEC. And basically, we must have a manager, a technical staff, and administrative staff. In some instances, however, CECs, especially those CECs hosted by small local government units, they only can afford a manager and one technical administrative staff, or in some cases, there are CECs also that are being managed by only one person, and that is the manager himself. But in some instances, like the provincial government and city-based CECs, they have more than three staff that man their CECs. And for the operating expenses, these are the common items that we usually spend for the operation of our CCs. We need to have some supplies. We need to pay for communication. This is for the telephone connection and the broadband connection for internet, training, repairs and maintenance, travel, advertising, and so forth and so on, including this non-cash expenditure of depreciation, because these capital outlays, building improvement, office furniture and fixtures, are depreciable assets. Okay, so for the building renovation, the estimated useful life is 20 years, and for the rest, 5 years. So in order for us to get the depreciation for a period of 1 year, we simply divide the cost by the estimated useful life, and we get the depreciation for 1 year. The total depreciation that we derive here is forwarded in the miscellaneous and other operating expenses under this account title depreciation. 97,400, this is the amount, 97,400. For newly established CECs, for newly established CECs, there is no depreciation actually at the time of preparation of the startup budget, because the depreciation is supposed to be computed at the end of a certain period, like at the end of the month or at the end of the year. So most likely we will not be able to find this account in the startup budget, including repairs and maintenance, because repairs and maintenance generally are incurred during the operating phase or after the launching or establishment of the CEC. For the rest, the accounts are the same. Uh, the startup budget and the operating budget are basically the same, except for these items, repairs and maintenance, depreciation, which are generally uh, reflected in the budget or in the report after a certain period of time, like 1 month or 1 year. Next is the trial balance. As discussed in the first part of this module, the trial balance is supposed to be prepared at the end of each month, so that the management of the CEC will have something to study, uh, for them to be able to determine the financial status and the results of operations of the CEC for that short period of time, which is 1 month. It is important that the management of the CEC be provided with time information, so that they will be able to respond also on a timely basis on certain contingencies or certain events or situations that affect the CEC. The trial balance of of an accounting entity or a business enterprise like a CEC is based on the account titles and the corresponding account balances that we derive from the general ledger. The trial balance, which states or reflects the balances from the general ledger, in effect tests or determines the equality between the debit and the credit amounts posted in the general ledger. In this case, the trial balance confirms that there is indeed an equality between the debits and the credits in the general ledger. Now, if the debits and the credits are not equal, then something might be wrong with the really there's something wrong with the account balances in the general ledger, or something might be wrong in this trial balance because it's possible that the amounts reflected here might not be the same amount that we can see or that we will see in the general ledger. But in any case, the debits and the credits should be equal before the accountant or the bookkeeper of the CEC will proceed to the next step in the accounting process, which is the posting of adjustments or correcting entries. Now, the trial balance that is derived from balances in the general ledger definitely may not be the final amounts that we will use in the preparation of financial statements because there might be certain adjustments, corrections, or reclassifications that we ought to make before we proceed to the preparation of the financial statements. For example, these adjusting entries could be adjustment for accrued revenues, accrued expenses, prepaid expenses, prepaid or pre-collected revenues, adjustment for depreciation if it has not been made, or adjustment also of year-end inventory. Now, after reflecting the adjustments, correcting entries, as well as reclassifying journal entries to the trial balance, then we arrive at an adjusted trial balance. So only then shall we prepare the financial statements of the CEC. And the financial statements that we will prepare for the CEC will take the form of a balance sheet, income statement, and statement of cash flows. The amounts that we use in the preparation of a balance sheet and income statement are basically derived from the trial balance. For instance, all the amounts here from cash on hand to accrued expenses, okay, are used in the preparation of the balance sheet. And the amounts from subsidies, grants, and donations up to other expenses are used in the preparation of the income statement.